Welcome back to BLOCKTV, and it's time for Crypto Globe, where we take a trip around the world to hear about the latest developments in the industry. To guide us on this tour is Ethan Pierce, director of the Paris-based Crypto Assets Institute. So let's kick this off. First of all, hi Ethan, how are you?
Hi Oran, how are you doing today?
I'm doing great, and it's good to have you on to talk these things through. So kicking us off,
it's a pleasure.
So kicking us off today is this exciting news coming out of Algo. There was $200 million raised in funds there. What's the significance of all of this, Ethan?
Yeah, so this is interesting. So Algo Capital, which was initially looking to raise around 100 million, closed around 200 million in investments. Algorand itself raised, I think, 126 million. So it's already impressive that a fund that's raising to invest into projects for Algo has raised that much money. So the idea behind the fund, first of all, Algo Capital itself is a large stakeholder in Algorand. So that's the primary activity. What they're doing with this is wanting to create a capital opportunity for startups, for projects that want to use Algo as a digital currency, or they want to leverage their project in Algo. So they want to provide an opportunity to invest in those projects and to encourage that kind of innovation. And interestingly enough, the fund itself was raised entirely in Algo, meaning that all of the investments made into the fund itself were made that way, which is interesting because a lot of funds, even crypto funds, still generally come from fiat into the fund itself. And much of the deployment of the capital will actually also be in the token. So instead of giving startups fiat or other crypto to spend, they'll actually be giving them the token itself to be used in their project. So it's very much a fundraise to increase the actual adoption and use itself of the project, which I think is very optimistic and encouraging for where this project will go.
Right. Also, this is an open source. This is a public ledger. Usually words that don't garner this much attention or this much funds. If we're theorizing here, why do you think that happened?
Well, I mean, even open source projects can, so this is not, even though the Algo Capital itself is a large stakeholder in Algo, the projects that they will be investing into will be potentially, would be, since they'll have some kind of a stake, we would expect them to be private projects, meaning somebody who's building a startup or an application or some kind of a project to use or leverage Algo. So, as we see with all kinds of cases of that, Red Hat leveraged Linux, WordPress, in terms of Automatic, the company leverages WordPress, GitHub. Projects can be companies can be worth billions that leverage open source IP or projects. So the fact that Algo itself is open source doesn't necessarily have any impact on the fact that people will build projects that are leveraging it. So this, as a VC fund leveraging into those things, would still expect returns on those projects. But yes, it's incredibly encouraging to see open source projects getting this kind of capital attention, hoping that there will be lots of for-profit good startups that build into it.
Absolutely, and looking forward to kind of see how that updates and how that develops and unfolds later on when things are actually happening. Now, there's news coming out of Switzerland here. The Swiss banking regulator granted banking licenses to 2 cryptocurrency-focused banks. Please break it down. Yeah,
so 2 pieces of news really interesting. So the first one that you mentioned there in Switzerland right now is Seba Crypto and Signum have both received at the same time banking licenses from the Swiss financial regulator. And the idea is that they actually did them both at exactly the same time, so as not to have the perception or even the reality of one of them getting a head start on launching into crypto banking in Switzerland. Both of them also have significant banking industry backing in them. The SIBA, which is based in Zug, is partnered with Julius Baer, which is a large private bank, so that gives them a significant entry into the normal kind of fiat financial world. And if we look at Signum, which is based in Zurich, they've got former UBS CEOs Peter Wupfli and Swiss central banker Philipp Hildebrand on board as advisors, and a few others coming in as well. So these are very much people who have tremendous traditional financial sector experience coming in to support these crypto banks. Having both of those licenses kind of come out at the same time will allow not to have just one single project that is kind of leveraging an opportunity in Switzerland, but to really hopefully jumpstart an ecosystem around crypto banking in the Swiss banking and financial sector.
Yeah, absolutely. It seems that Switzerland is trying to up its name recognition as a blockchain and cryptocurrency hub, especially with this news. And before we get further into Switzerland as a whole, there is other news coming out from Switzerland involving AML and KYC regulation. Break that down, and then let's ponder the Switzerland Blockchain Hub Fund.
So as encouraging as that first news is, that they're issuing crypto banking licenses, the second one is less encouraging. So the FATF, which is from the G7, is this international financial task force that has been coming out with lots of recommendations for regulations around dealing with crypto assets. FINMA, the regulator in Switzerland, has released its own statement now on how they want to adopt that and align with that, specifically around KYC and AML. And basically what they're saying is technology is unimportant in the sense of whether it's blockchain, crypto, or traditional banking or whatever. If funds are moving from one person to another, you need to know who those people are. So they've come out with a really strict guideline that basically says, if you're any kind of a wallet or an exchange, if you're holding any kind of crypto, then basically, if you're based in Switzerland, you are not allowed to transfer any of those assets from someone to someone else without knowing both parties, which means that you will not be able to send, if you have some Ethereum on an exchange that's in Switzerland, you would not be able to send that to anybody in the world. You would need to be able to send that to somebody that your exchange in Switzerland knows the identity of. And that's kind of complicated because right now we don't necessarily have the technologies in place to allow that passing of that information. But it also really takes away the privacy aspect of this, because now it's pure typical banking or finance applied to crypto in terms of knowing your customer. And that's going to be, I think, a very heavy thing for Switzerland-based projects to bear.
Right, and now I'm pondering out loud, this could have absolutely no connection, but we know that Libra and the Calibra wallet is now going to be based in Switzerland. U.S. House of Reps, along with Maxine Waters, just took a trip there and they were unsatisfied. Right. In your opinion, does this correlate in any way?
Well, I think the more unsatisfied the world's historical financial leaders and administrators are around where crypto goes, maybe the better job a lot of the people in crypto are doing, because we are trying to kind of maybe reinvent a system here. And so obviously they shouldn't be completely happy if all these former or current bankers are seeing their system about to get disrupted. So, take that for what it's worth. But I think obviously that will present an issue. I mean, Libra has said clearly from the beginning, at least in the US version for Calibra, that with the wallet, that KYC would apply in a way that was extremely compliant with all regulations. Now, how that expands globally and what KYC would look like if you're trying to send money between Brazil and India and China and the US and France and wherever, and crossing all these borders, if you're doing that through Libra, what would that KYC look like? Obviously, this is going to create a lot of pressure on Libra, because this is going to require, if Calibra itself, now the Libra Foundation is based in Switzerland.
Right,
I don't believe that Calibra is based in Switzerland. I think Calibra is based in the US, but I could be wrong on that. But it's the foundation itself that's based in Switzerland. So maybe Calibra wouldn't fall under this regulation. This is going to be for Swiss-based companies that are providing those services. So that's not actually the foundation itself. That would apply to the foundation and the Libra investment token, which is what the members of the Libra Association possess, the security token side of that for the asset that they're raising. But in terms of the actual Libra token itself being used through the Calibra wallet, I think that would be a different thing. But the real danger here is the idea that if we make, if regulators want to make this so strict and so difficult to work with, they risk increasing the push towards everything decentralized, peerless, with zero regulatory compliance, in a way that people are that we're going to see a larger adoption of crypto assets projects, especially things around currencies that are hidden in a way where they're going to places where nobody can track them, and people are going to use them in a way that can't be seen. I don't think that's the healthy way for regulators to be approaching this. I think there's a way to create all of the value that crypto can bring, and the way that it can democratize finance without actually coming down this hard on the way that things need to be managed in terms of KYC and AML. I understand their concerns, but I think it needs to also be understood that if you create that kind of a one or zero situation where you're either both sides are completely the way we want it, or it's not going to work, I think you're going to find that we're going to find lots of jurisdictions that just completely skirt these regulations.
No, absolutely. There is something to say, as we were mentioning before, this idea of Switzerland becoming the crypto hub. I guess they're lagging behind Malta and Gibraltar, and they're trying to up their game in that way, potentially to invite more more mainstream business to develop blockchain there. So if we look at that, what is overall, how does this latest news, these two pieces of information, leave Switzerland in the crypto space?
Well, I think so. Just like we talked about with France, with the PACT law and the digital asset service provider registry to whitelist projects, I think for businesses that are interfacing with the traditional financial sector, if large companies, large banks, large financial companies want to get involved in this, then they need to do it in jurisdictions that have very, very clearly defined regulations. And I don't think anybody reasonable is saying that that's not okay. I actually think it's going to encourage a lot of adoption. It's going to encourage a lot of capital to come into this. It's going to encourage a lot of innovation. And I think all of that is fantastic. I think the issue is if it becomes an all or none situation like this second piece, this news here that we're seeing, where they're basically saying that you cannot, that crypto cannot be transferred to somebody that the regulator in Switzerland doesn't know through the project itself, the exchange or the wallet, then I think that's potentially onerous, but this is brand new, so we'll see exactly how that plays out. We'll see exactly what kind of pressure gets pushed back onto the regulator from the market itself. You obviously have all of the pro-crypto forces pushing for things that were going to help adoption increase significantly, so there will be plenty to be said about what this looks like. Again, though, for traditional financial organizations that have regulatory compliance issues to deal with, that want to get involved in crypto, I think it's great to have these kind of rules that very clearly define how they need to play. But I think we need to, beyond that, we need to be very careful about limiting it only to that side of the equation, because we risk very much to push kind of the unregulated, decentral side of this to grow in a way that creates all the problems that they're wanting to avoid. So I think there's a balance there that needs to be struck, and I guess we'll have to wait to see how this pans out.
Absolutely. Curious to see how that ends up unfolding. But shifting gears and moving it to the United States, the Maryland Attorney General recently announced that Maryland Securities Division has joined Operation Cryptosweep. So break down what Operation Cryptosweep is and why this news matters to us.
Yeah, so the North American Securities Administrators Association, NASA, I'm sure they love that. It's 67 different jurisdictions across Canada and the US, so most of the states and a few other things thrown in. It's not actually a government agency. It actually predates the SEC. It's just an organization of all the securities regulators in these different jurisdictions kind of coming together to work together. So Operation Cryptosweep is something they started to basically look at fraud or non-compliance around securities regulations in the crypto space. And since doing that, they have done more than 330 investigations, over 85 enforcement actions against projects that, from their regard, were violating the law in some way. But this is generally a state issue, not necessarily a federal issue that they're going after. So, for example, Maryland joining recently into this group. And so why that's important is very much this idea that even states, so we talk about the SEC, but states also have regulators in terms of banking and finance and securities. So they are going after projects located in the US, or projects going after investors located in their individual states. And if we look at the NASA.org website, NASAA.org website, there's a list on the Cryptosweep page of all the projects that they have investigated and have gone after. And it's basically for unregistered securities sales or not being a registered broker dealer. That's the largest chunk of that. So just basically not having told anybody that you were doing it, or not having the appropriate certification and licensing. But there also is a certain amount of fraud there that they're going after from the perspective of they don't believe that the advertising has been necessarily honest or as open as it should be, or potentially, especially around risk, just not basically trying to sell people too much of a good thing, people losing their shirt and not understanding why. So it's very interesting and important, I think, for projects to look at that are either basing themselves in the U.S. or looking to raise from U.S. investors, especially Main Street retail investors, that you don't just have to look to the SEC, but you also have to make sure that individual states that you're being compliant in the way that you are issuing a security offering. So this is important stuff to be keeping a look at, and I think we're going to see even more from this. I think it mostly is around not registering the security correctly. If you're potentially selling that in a way that goes against broker-dealer requirements, then that's also an issue. But it's not just the SEC you have to be thinking about in the U.S.
Right, but so a lot of people believe, this is the general thought, is that the U.S. is behind when it comes to regulating crypto and regulating blockchain. Within the recent hearings, that was kind of the point. There's not enough definition and clarity. People need to move to other places, and our businesses can't thrive here. That kind of ended up being the bottom line. Now, in comparison with Switzerland, which we just spoke about, that's trying to create these clearer definitions, let's call them, whether be them good or negative for the space in its development as a whole. Does this kind of, you mentioned now you have to watch your back with the SEC along with this. Is this kind of a witch hunt?
No. I think the important thing, I think it's easy to see that from the outside. I think what's very important is we actually have very clear regulations and guidelines in the U.S. around issuing security offerings. The SEC is not being mean here in going after people who did not follow the rules. I think the issue is there were a lot of people who were not defining an ICO as a security, so they felt like that they could go around it. Some of that might be ignorance. I think some of it was very much willful ignorance. I think most of it was probably not bad intentioned. And I think the SEC sees that in a lot of these cases, which is why their approach has been well, they've taken the time to really analyze this. So I definitely wouldn't call it a witch hunt. I think the Libra thing has gotten a lot more aggressive because government works a lot through lobbying, and bankers and financial industry people spend a lot of money, and Libra Calibra could be the largest bank in the world just by turning the thing on. If that were to happen, that gets a lot of people frustrated very quickly when they see the opportunity here. But I think in terms of looking at these kind of news stories, this is actually just about regulators applying what are very clear guidelines in how to issue a security, how to market a security, how to raise funds for an activity by asking people for their money. And there's nothing new there. The only real issue is people basically saying that, well, yeah, but I'm not actually issuing a security, so I don't need to pay attention. And now the regulators like the SEC and the states through this NASA organization are coming back and saying, yeah, no, actually, you did. And so I don't think that that's a witch hunt at all. I think it's being fair. It doesn't seem to be overly heavy-handed. I think, though, however, to finish your point, that potentially makes the U.S. an extremely complicated place to raise money in if you are based there, or to raise money from if you are a global project looking to reach U.S. investors. So that, on the other hand, could become problematic. But yes, it's nice to see that we have clear guidelines moving forward in many of these areas. The issue now will just simply be how hard does it make for people to raise capital or to actually grow their projects. And it shouldn't necessarily be easy to raise capital. There needs to be appropriate protections in place, but money will flow in the direction of ease in this case. And I think, we risk pushing people into poorly regulated states, government states, or, to very much going down a road that completely pushes away any kind of idea of regulation. And if we do that, we create a very big problem that wasn't necessarily there in the first place. I think a lot of people want to work with these agencies and do things right.
Thank you very much, Ethan Pierce, for breaking down all the crypto news from around the world. Exciting to see where the world is taking this technology and how everybody's takes end up unfolding. It was great speaking with you and for you to break those down for us. For all you folks at home watching at blocktv.com, keep on watching for more cryptocurrency and blockchain-related news.
For more news and updates, follow us on Twitter.